Welcome. As we start out on this new week, Monday the 18th of February, we'll take a look at a trade to take us through for the rest this week. Now, Josh Mahony joins us with some more details about what you're expecting this week. Before I get into that, I want to take a look at Chris's long Dow trade that we had last week. He entered the trade at 25,164, and here we are now, obviously sitting on a nice little profit.
Yeah, it's been a particularly good week to be long the Dow. Pretty much you can say that about much of the indices out there, but certainly the Dow and some of the US markets been a big outperformer. Of course, people expecting something from the likes of the US and Chinese trade talks, and certainly that gives an uplift in terms of stocks. This is the 4-hour chart for the Dow Jones Industrial, which we can see here at the beginning of last week. We were sort of regaining some ground, but certainly pushed onwards and upwards from there. Particularly strong Tuesday and particularly strong Friday. So closed out the week in a very positive manner. Now, you know, hesitating a little bit, could see some sort of pullback. I think this is a particularly good place to take profit, quite frankly. And, you know, if we're looking for another long position, then maybe take a long position on 259.36 to break through that, because until that happens, there's a good chance we could drift lower a little bit, in which case that sort of erodes some of those gains. So further upside I do think is likely, but bear in mind that we have got, let's just go on to the weekly time frame, we have got this really important swing higher, sorry it's on the daily, we have got this important swing high of 260.72, so that's a really key resistance level to be looking out for on that daily time frame.
Okay, all right, well, let's take a look ahead now to this week. I know Monday, sometimes it's a bit difficult to know precisely where to jump in terms of the trade of the week. It's always very difficult because we always take it at this time of the week to know exactly where we're going to go. I know you've been humming and hawing about two trades you're potentially looking for, but which one have you settled on? Yeah,
I think euro dollar. I mean, we're seeing initial tentative signs that we could be bottoming out here for the short term at least, and certainly, you know, we were talking about this before we did this show, and certainly talking about, you know, you were saying, oh yeah, but it's not really going anywhere, which can be the case, but sometimes as long as it's doing something relatively consistently, then that can be beneficial, even if it's not a super trending market with it up towards the upside or the downside. And certainly we can see that on the daily time frame here, right? You see the price action that we've been looking at throughout 2019 so far. We're seeing relatively consistent swings. You see the odd sort of counter trend day, but by and large on the way up we're seeing consistent green candles, on the way down we're seeing consistent red candles with the odd outlier. So I'm hoping that's going to persist once more, and you look at this weekly time frame and you look at this descending trend line that we've got here dating back to August 2015. Well, since then we have been respecting it time and time again, and whilst we haven't necessarily always touched it perfectly, you can see that by and large it is an area that when we come back into, it seems to force the market back towards the upside and limit the downside that we have been seeing. Now you look at what's happened last week, right? We've seen this move towards the downside. We saw the strong move, which showed the sort of confidence in that move. So that alluded to the likeliness of further downside for the next week. We did see that, but certainly a big loss in terms of that confidence. You can see that half of last week's range actually ended up being made up towards the back end of the week. And now we're starting off the week in a more positive footing. If we look on the daily time frame, we can also see that Friday move with the fact that we saw this recovery at the back end of the day, giving us this long lower shadow, very small body. That is not indicative of a very bearish market right now. And you look at the move towards the downside, very consistent. Then all of a sudden we start seeing more green candles than red candles. You see candles where we have next to no body and very long lower shadows. All of this amounts to a market that is now looking like we could start turning towards the upside. If we look on the stochastics, a similar kind of story. We've broken into oversold territory, now breaking back towards the upside. So last time that we saw that, we can see it was the last bottom that we saw. And generally I like to utilize sort of overbought, oversold more in the case of breaking back up through that threshold rather than breaking below it in the first place in the example of an oversold market. So you see the break down below it. You know, it started instigating this period of consolidation, but it didn't necessarily give us a buy signal. Now we're breaking back up through that 20 mark. I think this is a good area to be long this market. The caveat here is the fact that this market is now creating lower highs and lower lows. So any upside we're looking for is going to be perceived as a retracement most likely, rather than an all-out recovery. So this points towards probably a good week ahead, but maybe not necessarily a trade that's much longer than that. So let's just finally go into this 4-hour chart, and we can see that we are regaining ground. We've broken through this 113.10 mark, and that negates the creation of lower highs. The lower lows element of it is not completely resolved, but certainly if we break through 113.43, that's going to give us even more confidence that this market's going to push onwards and upwards from here.
Interesting, actually, talking about that hammer candle at the bottom of that move that you were talking about there doesn't indicate necessarily to you that we should be taking a long position at that. Just bearing in mind the price action we saw, the shape of all that, where would you put your stop?
Yeah, well, this is the interesting one, right? Because I always look for trades that I get good risk to rewards, and sometimes, you know, it's a lot easier to just say, I want to be long here and I'll give you an absolutely huge stop loss. I think that means that if you're going to get a decent risk to reward, we're going to have to see huge moves towards the upside. And so if we're looking at this hourly time frame, what we can see here is this creation of higher highs and higher lows on this shorter time frame. The breakthrough 113.25 this morning and the close above that level, giving us greater confidence. So we haven't seen a breakthrough this 113.43 mark, which is the level I was saying would be, you know, give me even more confidence that this market's going to move onwards and upwards from here. But I'm willing to, for the sake of getting a good risk to reward, I'm willing to take on a little bit more risk and place my stop loss below this 112.95 mark. So let's say we put our stop losses at 112.88 kind of area, right? Let's just draw it up there, 112.88. With that, it means that we are placing our stop loss around about 39 points away from where we are currently. Towards the upside, you can see 39 is made up pretty easily without having to really sort of move into much of the previous downside. So you can see as we move towards the upside, let's say 100 points towards the upside would give us a very decent risk to reward, but it would still keep us well within the sell-off that we had been seeing previously. So even if this is a retracement, we can get a nice retracement at 61.8, 76.4, but still be able to get a good risk to reward. So let's just get Fibonacci's drawn onto this and see exactly where those levels are. We can see 11407 is the 61.8, 11448 is the 76.4. So that's the kind of area that we're looking to move into. And because of the fact that we're using a relatively tighter stop loss in the shorter term, the ability to break into those levels means we should hopefully be able to get. So if we're looking at, say, 39 towards a downside, the 61.8 is 80 points. So we're talking about a 2 to 1, the 76.4 over 100 points. So not necessarily 3 to 1, but it's certainly a relatively decent or pretty good risk to reward here. So, you know, for me, I think we'll take on a little bit more risk in terms of that stop loss, and with it, it should allow us the ability to take a trade that it means, okay, if you lose 1, if you lose 2, you hit the 3rd and it can get you back to square 1, or if you hit more frequently than that, then you're going to get more profitable trades.
Good. Okay. All right. Josh, thanks so much indeed. Setting up a long euro-dollar position for this week's Trade of the Week.